Hi, welcome all to this webcast today, where we will be looking at some of the investment ideas from the Nordic region. I have with me today Timo from Investment Intelligence, and he has prepared a number of stocks for the Nordic region that we're gonna dig into and we're gonna look at. So this is in order to give you some ideas and some insights and inspiration into a number of stocks that you might not know about, that you could go away with and see if that's something for you to invest in. This is just for inspiration and not investment advice. So please do your own research before you decide to go with any of these stocks. Let me just briefly introduce myself. My name is Jakob Christensen. I am eToro's market analyst for the Nordic region. I also have with me Timo from Investment Intelligence, who will be presenting his top stocks for the Nordic region. Maybe Timo, if you want to give a short introduction to yourself.
Yeah, of course. It's a pleasure. Thank you for inviting me. It's really nice to be here. And my name is Timo Heikkilä. I come from Finland. Investment Intelligence is our company that me and Hannu Huuskonen was founded in 2013. It's located here in northern Finland. Me and Hannu, we have years of experience in asset management, market analysis, and stock analysts. Our cooperation with eToro, it started in 2020. And eToro enables investors to copy our partner portfolio. So we are a partner here in eToro. We have 3 portfolios: EE Disruptive, Quality, and ETF portfolio. There's a picture of us in Tel Aviv, your headquarters, few years ago. So that's maybe my introduction.
Perfect. So. Thank you for that, Timo. I think maybe before we go into the specific stock you have chosen, we can discuss a little bit about the market, how 2023 gonna look like. We all know that 2022 was a tough year, higher inflation, high interest rate, really hammered a lot of stocks, particularly growth stocks and tech stock suffered a lot last year. I think that this year gonna be different. Why? Because we are seeing inflation slowly is coming down. We have seen in the US that inflation come down since the summer. We have seen now in Europe since November inflation started coming down, and we also start seeing the interest rate cycle, the top of that is likely to end during first half year of 2023, and I think that's just going to change the dynamics in the market. 2022 all about inflation, all about interest rate. I think 2023 going to be less about that, and it's going to be more about earnings. I think earnings really going to be what matters in 2023. I don't know, Timo, if you have any thoughts around that. How do you see that?
Yeah, I think the market situation currently is very complicated. Perhaps this is the most difficult situation in a long time. And there you see the picture. So that means that the Fed is dancing on a very thin rope at the moment. So they have raised key interest rate 7 times to 4.5%. They are doing that because of their fighting against inflation, and they want to kill inflation quickly. And this can only be achieved by slowing economic growth. And the risk in that is that the Fed is going to raise interest rates too high and keeps them high for too long. And this would then create a recession. And another risk is that the Fed will pivot too soon. In this case, the inflation starts to rise again, and it's poison for the economy and the stocks. But the Fed officials, they have repeatedly said that they don't want such a situation. It happened 70s and 80s, and it was bad. So that's why I think the first risk is more likely. And in that case, the economy drifts into recession and interest rates are high, and then maybe the current stock valuations, when the PE in S&P 500 is around 18 at the moment. So I think then if this risk comes through, then the valuation are too high. But you know, there's still a possibility for a soft landing, and as you said, stock earnings determine the direction of the stock prices. So I think that's my view about the market situation at the moment.
Right, and I think the sort of what we're all hoping for is that we start seeing really inflation cooling down. We start seeing that interest has actually topped, and that some stocks can sort of get a relief from lower interest rate once we get there. Keeping in the mind that the market's always looking ahead, and the market would sort of be looking for those interest cut that might happen. We don't know, but could be late in the year, could be beginning of next year, and that could potentially give an uplift to some valuations.
Yeah.
Maybe if you jump a bit more into earnings, Timo,
Yes.
How do you see that? I think right at the minute we are sort of having earnings seasons. We just slowly started out in the US, and we have many coming over here the next few weeks and month. It's basically going to be, we understand how the year 2022 ended in terms of earnings. What are some of the thoughts from your side around that?
Yeah, for example, in this graph, you see the black one is the S&P 500 graph, and then the blue one is the earnings estimate, and the red one is the actual earnings estimate for S&P 500. So you can see that the after the COVID, the earnings raised very quickly and very sharply, and now they have stabilized, and actually the earnings forecast has gone down. So and also the S&P 500 has come down around 20% or so. So you know, it depends. But what is the S&P 500 going to be after this earnings season in the late year? It depends on earnings, and at the moment the earning estimate for S&P 500 is 225. It means like few percent growth from last year, but the Q4 was all estimate is now negative, and also the Q1 and Q2 earnings estimate is negative. So there's going to be, if the analysts are correct, there's going to be some kind of earnings recession, but let's see. There's only the big banks have now released their earnings, and the big technology companies are releasing it next week, and after that, so we are really in the first steps of the earnings season, and we really don't know. But if we are going to the recession, normally in the recession the earnings are going to be flat or negative. So I mean the earnings growth is going to be negative. Earnings are not going to be negative. Yeah.
And to be fair, having a view on the earnings for 2023 is very hard. Historically, there's all these forecasts, and they tend to over the year drop a bit. So I guess we could, particularly with the recession, potential recession ahead, that's also something that we could see for this year. But very interesting to hear about. If we look at the next slide, I think you have put together some forecasts from various of the global investment banks, sort of what is their view, and they consolidate them all down to sort of a few bullet points. Maybe if you want to walk us through that and tell us what are the big investment bank thinking for 2023.
Yeah, you could say that this is a market consensus. So this is BlackRock, Goldman Sachs, JP Morgan, Citigroup, Morgan Stanley, Credit Suisse, Societe Generale, and so on. So they are all the big guys. And I don't remember the year when almost every big investment bank is like, their forecast is almost the same. Of course, there are like few outliers every time, but now the consensus is really that the recession is inevitable. It's not going to be that bad, but still a recession. The inflation cools down. but stays above 2%. We have seen it now, I think it's 3 or 4 times in a row that the inflation has cooled already down. Interest rates have passed their peak. 10-year is now around 4%, and it was 4.6 a few months ago. Also, the 2-year note has come down. And all the investment banks expect stocks to have a weak start to 2023 and a better second half. So, and that's why almost all the investment banks are underweight stocks at the moment. So, but this has been now 3 weeks for 2023, and we see that the start has been actually quite good. So, I don't know. It means that it's really hard to forecast, but let's see. There's still
It's a bit early. It's a bit early that the predictions
this week start
are not on time, but maybe they're referring to the first half of 2023.
Yeah, that's correct. And the second half is going to be better if the forecast is going to be right. But one good advice is that time to buy stocks is when the central banks abandon tight monetary policy. But of course, the stocks, they are going to try to they are going to be at the leading indicator, so they are going to try to know beforehand when that's going to happen. So, but that is one good point.
Yeah, I think that's always the funny thing about market. They always try to time it right well advance of the actual event happening. But do you see that going to happen anytime soon? Do you have any view on when the Fed and when ECB would pivot and sort of go for a looser monetary policy?
Well, the Fed has said that they are going to raise rates 0.75%. Still, that would mean a 0.25 percentage point raise. So, but the Fed is really bad at forecasting what they are going to do. For example, last year they didn't say that they are going to raise rates 7 times and 4 times in a row 0.75%. So, but the market thinks that the Fed is going to raise 1 time and 0.25. So maybe something in the between. I think the Fed will raise 0.25 or 0.5, and in the first half, but second half they are not going to do that. If they are going to do, that's going to be a mistake, and we all know that they have made mistakes, earlier. For example, they should have been raising rates earlier in 2022, and another mistake was in 2018 when they made this one last interest rate raise. So they have done mistakes before, so I hope they are not going to do that this time.
Yeah, and to be fair, it's also a very difficult environment for them to work in, right? Things are changing and moving all the time, and they might also have an incentive to sometimes, in this instance, I think they like to talk a very tough game because they want to sort of give the market an idea that interests are going to get very high. It might be that they actually get less high. It's just sort of that game that they're sometimes playing a little bit for market to act the way they like them to. So that's very interesting to hear about. Maybe if we, Timo, if we dig into our local economy, so if we zoom in on the Nordics here, we have Nordics, the 4 countries. I think from many outsiders, the Nordics looks like a sort of a very united economy, and to some extent it's true. We got very similar political system, we got similar welfare state, in many ways, like socially very similar, culturally very similar. But actually, one thing I think is important to highlight, that the economies themselves are actually quite different. I mean, they're even running on different, foreign exchange regimes, and they have very different exposure. They are in very different industries. So maybe if you want to give us a few of your thoughts around the 4 economies, and maybe more the 4 stock markets, how they differ across the region.
Yeah. So if we dig into the indices, for example, in Sweden, the industrial has a 38% weight in this index, and the financials have 24%, and Denmark, the healthcare is the biggest sector there. Norway, the energy has more than 40% weight in the index, and Finland, that's also quite industrial heavy, 26% weight in industrial and 20% financials. So they all are quite different. Maybe the Sweden and Finland are closest together, but Norway and Denmark, they are a bit they differ more from Finland and Stockholm. And if you compare that to Europe, the biggest sector is financials, 17%, healthcare is second, 15%, and industrial is 14%. So those are, it varies quite a lot from the Nordic countries. And all the Nordic indices, they have offered better returns than DAX in German or Europe stocks, Europe 600 index. For Denmark, Copenhagen Stock Exchange have give you 96% 5-year return, and Swedish stocks 40%, and for example Dutch DAX index only 7% 5-year return. So the Nordics have been quite good investments in past years. And
yeah, I'm very happy to see that, and particularly with the Copenhagen index on top of all that. And I think it has a little bit to do with Novo Nordisk, but maybe we can go into that later on. No, that's very interesting to hear about, and how sort of compared to, it also looks like it's been doing better than the broader European index.
Yes.
So that's very interesting to see. I think the Euro stocks have a very bright start of the year, whereas I know some of the Nordics haven't so far catched up that much. But that's good to see that the Nordics are on top when we look across the region.
Yeah.
I think if we jump to the next slide, I wanted to talk to you about the stock tool that you've used to pick the 8 stocks that you're going to present. So you have chosen 8 stocks, 2 from each country in the Nordics, and to do that you have used a particular tool, quantitative tool that you have developed. Do you want to give us some insight to that tool? What is it all about, and how does it work?
Yes, of course. So this is our stock tool. We have developed this. It's around 10 years of work behind this, and stock tool, it includes all the S&P 500 stocks, all the stocks Europe 600 index stocks, and some others. So there are more than 1,100 stocks in the tool, and it ranks stocks based on 6 main factors. So it's quantitative model, and those 6 factors are momentum, total risk, quality, value, growth, dividend. And the total points is calculated as a weighted average of those 6 factors, so that the scale is from 1 to 100 points. So those risk, quality, value, growth, dividend, I think those are quite familiar to many investors. So our stock tool does that. And
okay,
and I
well,
have
that sounds
used,
good.
yeah.
Yeah, I was just curious to what markets are you covering? Is it Nordic specific, or are you wider? Are you worldwide? Are you US focused? Are you European focused? What stocks are you looking at through this model?
So this stock tool includes all the US S&P 500 stocks and all the Europe stocks 600 index that are included in that index, and some other,
so it's
some Asian
very
stocks
well covered,
and some growth stocks also, but 1,150 stocks altogether.
All right, that's quite a pool you have there. So you have a lot to choose from. That's really good. And I understand then, based on that tool, that you have selected 8 stocks that you want to present to us, and sort of give this as some insight or inspiration to the viewers. Of course, they have to do their own research as well, but you wanted to sort of share your ideas and the stocks that your model has selected as some of the one to watch for here in 2023. So maybe we go look at the first one.
Yeah, that would be great.
So I think we are in Denmark, aren't we, on the first stock?
Yeah, we start from Denmark. So I have picked 8 stocks. They are all a little bit different, and I hope they give some idea, and they are all a little bit different from the investment style. So I hope this gives inspiration to viewers. But the first one is Carlsberg. That is probably the best beer in the world. And in history, the consumers have not left their beers without drinking, even in a recession. So this could be a recession-proof stock. And it's only 70% down from 2022 highs. It has a stable growth and steady profitability, rising dividend history, and 3% yield. And here on the right side, you can see the 1-year stock chart. The stock dropped dramatically after the war in Ukraine, but now has made a quite solid, nice comeback. And here are also the points from our stock tool for Carlsberg. What else? It has in 2022, it has a really nice organic growth of operating profit around more than 10%, and has a strong balance sheet, and I think those are the main points for picking Carlsberg.
Okay, no, that sounds like some good points, and I also see that it scores very high across. I see that it has very low risk, 10 there. So scoring very well, but having a low risk. How do you see that I see that the stock price fell quite a lot back in February, and I believe that's a consequence of the conflict in Ukraine and Carlsberg deciding to moving out of Russia, so selling their operations in Russia at some discount. And is that what you're seeing, that initially the stock took a hit because of that? That having to close operations, but then it seems like it found a new level somewhere, halfway between the previous top and the hit it had from selling those activities.
So that's definitely why the stock fell so much in the early 2022. But they already made around 1.4 billion euros write down on Russian assets. And I think there's around 1.5 billion left if they have to write all the Russian assets down. But I think you can see that almost all that is in the stock price, and the operating profit has risen quite nicely this year.
Yeah, so the market has sort of taken account of that already, even though the sale hasn't happened.
You could say that it's in the price.
Yeah. Okay. Yeah. That's interesting to understand. And I think maybe another risk that I became aware of is the rising energy and commodity prices. I think that was a big theme for Carlsberg during 2022. I know they've been protected a bit from the hedging, but do you see that they're able to pass on the price increases to the end consumers? Or do they have to, or are they getting squeezed on the margins going forward?
Well, the organic growth in operating profit is going to be more than 10% in 2022, and they have made price increases, but latest price increases that take effect on Q4. So we are going to see that how it's going to play out in a few weeks when they report. But I also would like to point out that the inflation is going down. So they have made price increases and the inflation going down. So maybe the margins are not in that much pressure in 2023.
Yeah, no, I think that makes sense. And I guess one of the thing that they are there might be some challenge ahead is a upcoming recession. Do you think that that's going to impact, how their sales? Are people going to drink less beer, or are they going to maybe drink more beer during a recession? Or do you think that can have an impact on their growth and their sales?
Well, normally consumption of beer has been quite stable during economic recessions. I don't know why. Why is it? Maybe people are miserable, so they want to find something joy to their lives and they drink beer. But that has been normal case. I don't know, is it like that in this recession? But the last they had a 20% growth in H1. But we don't know how the growth has been in the second half of the year yet. But no, if this is normal recession, then people are going to drink beer, so it's not going to be that much a big effect.
Right. I think I've heard before that sort of the total sales is going to be more or less the same. What you sometimes see is that as people go to restaurant and bars less, you might be that they have less sale in that segment, but then they actually have more sale in the retail segment. So, and they generally have a little bit of a lower margin on the retail segment compared to the restaurant and bars. So that way, even they sell the same, the margins could come under slight pressure. But I think you're right that sales sort of overall is quite stable.
Yeah, that is correct.
And
if we are using the 2023 earnings estimate, the PE ratio for Carlsberg is 15.4. So it's not that expensive stock. So I think that it's quite cheap, and it has taken consideration of this margin pressure that may come.
Yeah. Okay. No, that's going to be interesting to see. And then just quickly, I see that it has very high dividend scoring. So I suppose it's a good stock to have if you are a dividend investor and you want some of those.
Yeah, the Carlsberg dividend yield is close to 3%, and profit growth is double digits. So they have a 15% payout ratio, and they also have a buyback programs. They have been a good dividend company, and it looks like they're going to be that also in the future.
So definitely a good first choice, and I think you said probably the best beer in the world. Maybe it's probably the best stock in the world. No, I don't know about that, but But they do have that slogan for probably the best beer in the world. If we jump to the next one, we're still in Denmark. Another top pick stock you have chosen in Denmark, Novo Nordisk. Maybe you want to give us a bit of introduction to that.
Yeah, it's a big healthcare company. They have drugs for diabetes and other serious chronic diseases. And if you look at the stock chart there, I think one of the best stock charts. It has a really nice uptrend there, and stock is over 15-day moving average. It's the biggest company in the Nordics according to market cap. It has really high quality, low risk, and it also has growth. 15% average 3-year revenue growth. But maybe the downside is that the valuation is quite high. If you take an earnings estimate of 2023, the PE ratio is 26.3. But this is quite normal when you have a high quality, low risk and growth, then the PE ratios tend to be maybe a bit high.
Yeah, and I see it scores very high on quality very high, dividend high, growth high, little risk, and looking at the graph, it's gone the opposite way than any other stock almost in 2022. It looks like it has gone up quite a bit over the year, whereas we've seen most other stocks going down in 2022. So I guess that has been one of the very good ones to hold in 2022.
Yeah, one of the best stocks in Nordics in 2022.
Right. And I think now it's with the rise, it's really one of the top market cap in the world, it's quite high up there, because you've seen other stocks last year lose a lot of value, but this one has just gone up in share price. So it is the biggest in the Nordics, but even on a global scale, I think it's ranking quite high up there. And I think, but I guess one sort of risk for stock like that has gone up a lot over last year. I guess a lot of investors sort of had expected this an upcoming recession. We have been talking about recession since last summer, basically, and we have seen inverted yield curves. We have all the signals of a recession coming, and I wonder to what extent investors have sort of took advantage or have seen that and then positioned themselves quite defensively. So a lot of investors have moved into healthcare stocks, defensive positions, and if we start then seeing, that the recession is going to be milder, are we then going to see that people would be dropping this stock and go, towards maybe more risky? They take a more risk on view. They go for more growth. They go for more tech. And could that be a risk for a stock like Novo that, at some point people want to get out because it's too defensive?
Yeah, I think that is maybe one risk, but maybe it's more like that. Then the Novo's stock return would be less than the more riskier ones. I don't think that is going to go, if the whole market is going up and the riskier ones are going faster, I don't think Novo is going to go down. I think that just the return is going to be lower than the riskier ones. But I think that's the main thing, that people should always diversify so that the portfolio's return is not dependent on one or stock or sector. And of course, because the valuation is quite high, they have to grow. So for this year, they are going to grow. I mean, the last year, 2022, they are going to grow 14 to 17%, and this valuation, I think, expects that they are going to have to grow 15% per year. So if they're not going to grow that fast, that is also a second risk for Novo stock.
Yeah. But it is also interesting one, right? Because you see that it has very high dividend and high growth, which is not too often you find stocks like that. But I mean, I think it is a very good cash machine, right? But at the same time, you have more and more people suffering from diabetes, and they have a growing market. So it is one of those that's can deliver that.
Yeah, they have a really good dividend history. The dividend yield is quite low. It's only 1.2%, but the dividend history is very good. So they have a rising dividend history. But I think it's quite common if you have a big healthcare sector stock that they can grow and they pay dividend at the same time. So I think there are also a few other examples in the global market as well.
Perfect. No, thanks for that. I think that if that is our top picks in Denmark, let's have a look at the next market. That is in Sweden. You have selected a stock here. Do you want to tell us about your top pick in Sweden?
Yeah, let's change the country. So the first from Sweden is Assa Abloy, and it's a world famous lock company, or they say that they are providing access solutions, but everybody knows Abloy's locks. So stock is now back into uptrend, as you can see from the right hand side, and it's really high quality growth company. And the business has a really good momentum. Then the stock valuation has decreased. It's now only 17.7. The PE ratio, if you are using the 2023 earnings estimate, the momentum of the business is really good. In the third quarter, they had a 14% organic growth, and the operating income grew 47%. So, and the management sees a good momentum in Assa Abloy's markets, and it also has a 3-year growth rate of 12.7%, and they are expecting to grow more than 10% in coming years. So, and one point also is that it has always been a very high quality company, and it has had a PE ratio in history around 25 to 30, and now it has 17.7. So I think this is a quite good entry point for us stock.
So it's actually trading relatively cheap now. compared to its history. But that's interesting to understand, and also surprising that a sort of call it lock company or access solution might be the proper word, but that it actually has so much growth, expected growth. You would think that it operated in a more mature, consolidated market, but it seems like there is room for them to still grow, at least according to their own guidance.
Yeah, that is interesting, but they have growth. They have a good history in growth since 2005, and they still are quite small in Asia. They have a technology business that they are aiming to double. There are some mega trends that like changes in demographics and urbanization. All those drive growth. I don't know, but it has been really remarkable story, and maybe the best industrial company in the Nordics.
Okay, that's very, very interesting to hear about. And I've heard that also in some countries, I think for instance in South Korea, they have, everybody has smart lock there, and that's something we have in the Western world. So maybe there's also a big transition for with sort of the shared economy and those mega trends that gonna facilitate that more people would start using smart locks. And maybe that's a big opportunity for them as well.
Yeah, that is correct.
Is there anything else on this stock, or do we want to jump to the next one in Sweden?
Yeah, we can go forward.
So the second one in Sweden will be Evolution.
Evolution, yeah. So
let's hear a bit about that. That looks to be slightly different. Now you're moving into more of a growth stock rather than a dividend stock, I think, or value stock.
I wanted to pick a different kind of stock. So this is a growth story. Evolution is quite young company also, but it's an online casino technology. So they don't have online casinos, but they offer technology and software solution, actually the casino games for the operators, and it has had a really fast growth. In 2022, they are going to grow 37%, and the profitability is really high. The EBITDA margin is 69%. It's almost 50% from its high, but you see that the stock is making a really nice comeback now, and it's almost there where it was in early 2022. But
yeah, and given that it's a growth stock, that's good to see that it's sort of back up, because we have seen that with many other growth stocks that haven't regained yet. But this, they seem to have managed to regain a lot of the losses from the higher interest rate environment.
Yeah, that is correct. But maybe it's because of that the evolution. It wasn't just a pandemic play. Most of the growth stocks, they were pandemic winners, but Evolution, of course, they were doing very well in pandemic. They have a 3-year average growth rate of 66%, but now you see that they are still growing almost 40%. So it's not just a pandemic play, and they are growing very fast and still are very, very profitable. That's why I think the stock has made a nice comeback.
Okay, and just one thing that jumps to my eye is the risk scores low on risk, meaning it's a high risk company. What is driving that? Is there anything we need to be aware of as investor before jumping into this stock?
Yeah, the risk score 3 means that it comes from the volatility of a stock and a beta coefficient, and also the variation of EBIT in history. So this stock has a quite high volatility. So and it's a growth stock. So I think all the growth stocks, the biggest risk is that the growth will slow down, especially in this market situation. The company also says that it emphasizes growth instead of profitability. So if the margin falls, for example, because of wage inflation, that also might scare away investors. So I think those are maybe the biggest risk, and the risk score is because of the volatility and high beta.
Okay, so it could actually be more on on the volatility of the stock price rather than the fundamentals of the company. They can still be quite healthy, even has a low risk score. It can still have strong cash flow, strong earnings, and a little debt.
Yeah. And did I mention the PE ratio already?
No, that would be interesting to hear about.
So if
what
you
levels
take
it's trading.
Yeah, if you take a 2023 earnings, the PE ratio is 18. So I think that's quite cheap.
Yeah, for a growth company, that seems quite for growth, and the tech company seems quite cheap.
If you have a PE ratio less than 20 and you are growing more than 30%, so I think that's quite a good combination.
No, that's excellent to hear, and I think it also, for the stocks we've seen now, we've seen dividend stocks, the first few ones, and now we're going to more growth, and I think that's, as an investor, that's also part of it to balance out, right, and having various risk. So I think that is a good pick as well. Anything else on evolution, or do you want to jump to the
let's
next
go.
country?
Let's move on.
Yes. So I think we're done in Sweden now, and let's have a look at the next country. So that's Norway. We're going to Norway now. I think we're going away from growth again, if I'm not mistaken. Tell us about eToro.
Yeah. So we are going to the 180 degrees to the opposite direction. So this is Equinor, the Norway's biggest oil company. It's the second biggest company in the Nordics after Novo, and it's one of the best performing energy stocks in Europe. And it had a super earnings 2022. You know that I think their EBIT, earnings before interest and taxes, operating profit is more than 70 billion euros in 2022. That's insane, and it has a low PE ratio. It's less than 5 if you take 2022 earnings estimate, and if you take a 2023 earnings estimate, PE is 6.6, and the last year was a year of energy stocks. So of course I had to pick one energy stock, and Equinor is the biggest. Might say also that the best one in Nordic. So that's why I pick Equinor. And one point, that do you know that Equinor, they are paying taxes in 2022 amount that is half of the Finland's national budget.
Whoa.
That is also that's insane. They are paying taxes that like more than 40 billion euros in 1 year.
That's very impressive. And and the owners, the majority owner of Equinor is also the Norwegian state. So
that is correct.
I think they gotta get a lot of tax, and what they're not getting in tax, they're getting in dividends. So I think it's very good for the Norwegian state and the Norwegian economy.
Yeah, they have so much money that they don't know what to do with that.
Maybe they can start sharing with the other Nordic economies. That would be really nice. I'm seeing that as you're saying, it's trading at a very low PE. So I mean, it's what is it, 6.5 times?
2023 earnings. Yes.
Yeah. So it's you can really say it's really a value company in that sense. Do you see any risk in terms of the oil price? I know Equinor they position themselves as a bit of a energy company, and they're also doing a little bit of renewable, but I understand that in the end of the day, a lot of their income or earnings is basically tied down to oil and gas.
Oil and gas price. Oil and gas price, that is correct. So of course, if we are going to have a deep recession, then the oil price and gas price, at least oil prices, are going down. So that is of course going to affect on Equinor's earnings. So that is the risk, and analysts, they expect that the earnings have peaked. So last year was the best for Equinor. This year the earnings are going to decrease. So if they are going to decrease more than analysts are expecting, I think that is a risk. But there's more than 7% dividend yield if you buy Equinor now. So, and they made such a huge profit, so you can expect to have 7% dividend yield at least for 2 or 3 years if you're
That's
buying
very
it at
impressive.
this price. So
Yeah, that's
that
very
gives you
impressive.
that is the point of buying value stocks. If you like low PE and high dividend yield, so Equinor is one pick from Nordics.
And do you think they are benefiting in terms of the price? Are they benefiting from investors not wanting to hold it because it's too much of an old-focused company? And with the whole transition into green energy, I think various funds start having limits to how much they can invest into oil. Does that play? Do you think that play anything, or is it?
At least it played, for all the traditional energy companies a few years ago, but now they are all trying to transfer to green, and Equinor is also, they have a strategy how they compensate all the carbon emissions, and so they're all going to change, and maybe it affects so that the valuation is maybe a little bit lower than the average stock.
Yeah. Okay, no, that's interesting. I think they are going through the transition into, but it's a long way because they are mostly based on oil and gas at the minute. But
they
who
definitely
knows?
have a money to do that. They definitely have a cash to do that.
Yeah. And we have seen it in Denmark with the Dong Energy that was transformed from a classic oil and gas company with the Danish government as the main shareholder, and they transformed into Ørsted, which is today operating wind farms across the world. So it's surely doable. Ørsted is a great example of that, and that's today trading at a much higher PE. So that's something that investors like to see.
Yeah, and I have also one example for that in my last stock pick when we go there. So that is also...
Let's have a look at that once we get. I think let's jump to the number 2 in Norway. Nordic Semiconductors.
Yes.
Looking at the score, I think you're flipping it 180 degrees again. Now we're going from value to growth.
Yeah, that is correct. So this is Nordic Semiconductor, specializes in wireless communication technology that powers the Internet of Things. Their main product is Bluetooth chips. This is also a very fast grower, 45% 3-year average growth rate. It has a high profitability. Their revenue target is $1 billion in 2023. That means 27% growth. And still after that, they expect more than 25% growth onwards. Stock is down. You can see from the 1-year stock chart, I think it's almost 50% down now. But the PE ratio is 19.4 using 2023 earnings estimate. So it has a 40%, 30% growth, and a PE ratio less than 20. So that's why I picked this. It has a megatrends behind it.
Yeah, no, that's very interesting. And so again, here we are not looking at dividends. You're not going to get any dividends, but you are gonna potentially get a lot. They don't
pay dividends. They invest in growth. So you're not going to have a dividend. So if you have a dividend investor, then skip this.
Yeah, and it's great to see a Nordic company, a Nordic stock in this field. I think when we talk about semiconductors, we always hear about East Asia, we hear about China, Taiwan, South Korea, and we hear about the US, and in Europe maybe we hear a bit about the Netherlands, but to see a Nordic company competing in this game is really good to see, and hopefully we can see more of those companies in the years ahead.
I think so too. Yeah.
Is there anything else we want to touch upon? I'm just conscious of time, and we also have
maybe the one thing is that they have had some supply constraints, the wafer supply constraints that has affected the revenue. They are expecting the Q4 revenue growth to be only 17% because of those, but they have big customers like Amazon, Samsung, Google, Apple. The demand coming from those is really firm, so you can maybe wait a bit. Is the demand still at a good level? But when that is confirmed, I think it's really good stock to look at it.
Okay, and do you see it's a stock that's good to get into before a potential recession really hits, or is that not going to matter? Or is it better to do it when we see the
Normally,
the monetary policy? Is that like a timing thing of this, or is it?
Yeah, maybe you can do dollar cost averaging. It's so difficult to time the market, but normally the semiconductors, they are leading, they are leading indicators inside the stock index. So they are like leading indicators to economic growth. So if you see the semis going up, if it's stable growth in semi stocks, then you know that the economy will follow.
Yeah, and I think you have a good point for those volatile stock. Maybe this is where dollar cost averaging is good to use, right?
Yeah.
Because you have that much volatility, it's very hard to time, the time when you should buy. So averaging out can be a very effective tool to making sure you get the exposure, but you also limit your downside.
Yeah.
Great. So let's jump to your home country,
Yes.
Finland. You have two stocks there as well you want to present for us?
Yeah. So first pick is Huhtamäki. That is a global provider of sustainable packaging solutions for consumers and food service customers. Those customers are like Starbucks, McDonald's. If you go to Starbucks, you have a cup of coffee. It's made Huhtamäki has made it. It has a good quality, like you see from the scoreboard there, a relatively low risk, PE ratios 13, and dividend yield more than 3%. And actually, this one has the best analyst rating of these 8 stocks. So the analyst rating is from 1 to 5, where 1 is the best. It has a 1.8 analyst rating. So also the analysts believe in Huhtamäki at the moment.
Okay, no, that's an interesting one to get. I see that it scores low on the moment, maybe.
Momentum.
Is there something to be aware of as an investor there, or?
Yeah, it's if you look at the stock chart, you see that there's no clear uptrend. That's why the momentum is not that high. But the positive side is that the stock is now above its 50-day moving average.
Okay. And again, it's also a dividend paying stock, right? So
yeah. It's actually one of the best Finnish dividend stocks. It has a really nice history, and analysts are expecting it to grow dividend around 13% in coming years.
Okay, what is the dividend yield on a stock like that?
Dividend yield is 3.1% for Huhtamäki.
Okay, you have it there, right? Okay, no, that's an interesting one for the portfolio. Anything else on this one we want to cover, or otherwise I will jump to the
maybe
last Finnish one?
Yeah, maybe the last point is that in Q3 it grew 31%. The revenue growth was 31%.
Okay,
so it had a nice, like many cyclical stocks, it had a really nice growth.
Yeah.
Late last year, but we can move on.
Okay. So looking at the last one, last of the 8 stocks, and it's in Finland, and it's Neste.
Yeah, Neste.
Yeah, a bit about this one.
Yeah, this is also an energy company, but this is renewable energy. So this is the world's largest producer of renewable diesel refined from waste and residues, and has renewable solutions also to aviation and plastic industries. It has had a really good long-term return. 3-year growth rate of revenue is 37% on average. There's a high profitability, and you could say that it's a megatrend stock because of this renewable solutions that they are offering.
Right. Yeah, that makes sense. I noticed that it sort of score a little bit average across all of the scores, only sort of with quality being high, the remaining sort of be very middle ground.
Yeah.
So that's interesting to see. And the scores 5 in risk. Is that what risk are we seeing for this company?
Yeah, the risk is more like in a stock that is investors think that it's a cyclical stock, so it has a little bit higher beta and a little bit higher volatility than than an average stock. But
Okay.
I would position this stock as a megatrend stock with potential for growth and especially profit growth in the coming years. And the investors are always looking at the renewable figures. What is the EBIT in renewables and so on? So the revenue growth depends quite much about the raw materials, but the renewables are the ones that the investors are looking when they look Neste stock.
Yeah, absolutely. I think we had 2022 was all about went back to oil for temporarily, but I think the mega trend will continue, and investors will look more and more towards the sort of green transition and renewable sector. So getting in early on one of these is just great, because the demand going to be there in the years ahead.
Yeah. Yes.
Perfect. I think that's conclude your 8 top pick stocks.
Yeah.
As I said, I think this should be seen as insight and inspiration. And you, as an investor, you always need to do your own research to understand a stock before purchasing. But this has been super useful, super interesting to hear about this, and great to see that we have these stocks in the Nordics. And I think we should bring that out to our international out to the international investors as well, so they can start looking more at our region.
Yeah, thank you. I hope this gives some inspiration to look into Nordics. So just a reminder that we have those 3 portfolios, and these are the returns from this year. So Disruptive, that invests in technology stocks, they had a bad year last year, but now they are making a comeback, and those other are more defensive portfolios. So if you are also interested, so you can check those out. And if you have questions or anything, you can send me an email. You can find an email there.
That's good to see. And those 3 portfolios can be found on eToro's platform.
Yeah. Yes. Correct.
That's great.
I
think
use just a search, or then go to the partner portfolio. So there you can find those. Yeah.
So that they should be easy to find. I think thank you, Timo, for sharing your 8 top stocks. It was very interesting to understand and get this insight into your model and see how that works and understand why it has picked those 8 stocks. So thank you a lot. And thank you for everyone who has been seeing this webcast, and I will see you all soon.
Yeah, thank you for inviting me. It was a pleasure.
Thank you.
Bye.
Bye.